Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, January the 5th, the year 2018, the first week of the new year. Happy New Year if you haven't tuned in yet. And it's NFP Day. And we're still in some of the NFP action, so I thought I should shoot the video. And maybe we can capture some of that while we're shooting. Money and risk management, very important. Okay, you can see the weekly, the euro popped up. It broke that high, and we're 37 pips above the high. Now, this is the TRO HL5 indicator. HL in the beginning meant high-low, but since then it now means horizontal line, because it plots a lot of different horizontal lines, not just the high and the low. And once again, you can see here we've got some nice moves off the weekly open, and we've got here we go, the euro pound is right around the weekly open, has to decide which way it wants to go. Looking at the daily, you can see here price entered the upper wick zone and came back down. We'll show that in a minute here. Once again, the buy zone, if you triggered, you probably either took a scratch trade, maybe 1 or 2 pip profit, maybe 0. And then you took some heat, and it looks like you then either took a loss or you stopped out here. But then if you stuck with it, you made it back. But I don't think anybody's trading for about 16 hours in a row. But then again, I don't know with some of you guys. Here you go, a little pop here, obviously on NFP. And you can see here the rat, not much of a range, just the 40 pips. But you can see here it put in a bottom. There was no, you probably have to drop down to M1 anyway on NFP to get any real action. And once again, you see the open, you see the pivot, see the price hit the pivot. Pivot fade, profitable trade. Hey, that was a rhyme. I didn't even, I'm going to have to use that one again. Pivot fade, profitable trade. Maybe I'll make a video titled that. Anyway, price action. Using the H1 chart, price at the line, you see a flip in color, you take that and then you take your profit. Once again, you see a flip in color and then you take it. In other words, you see a turn from red to green or green to red. In this case, lower low, you see here, if you took that trade, guess what? That's why you have to look at all the price action. So here, you know, we got a flip in color. We got a higher low when it's meeting that line, right? See, we got a lower high here. Maybe it's about equal. Yeah, there you go. But see here, if you trade that flip, what do you have? You got a lower low, lower high. Why are you trading long? It's price action. Just a simple question. Once again, using yesterday's 5 lines. You could throw the pivot in here, but that's a entirely different trade. And here we go once again. You can see taking the H1 candle color at the line is usually profitable. See here, that would have been a nice 10 pip scalp. Once again, price enters the wick zone. Doesn't like to stay there. It entered, didn't go out the top, came out the bottom. And the holo zone, we had a highest open put in way back there, but as you can see, it came in here and came right back out. Came in here and out of the holo zone. So once again, profitable trade. And here, just looking at the reminder, I'm thinking maybe I'll take this template off. And of course that's Mr. Squiggly, but we don't want to talk about squigglies at the moment. Let's see, there was something I wanted to show you. I'm trying to remember. It was on the dollar yen. I think. Let's see. Bear with me a second. It was something about the dollar yen. What do... Oh, I know what it was. Yes. Okay. If we look at the daily, okay? See the daily? Now, if we look and we turn it back to the week, you see it put in a weekly low here. Weekly low, 112.06. Now let's go back to the daily right here. 112.06. Now, normally we play the rat zone off of the daily low. When the daily low and the weekly low are this one and the same, that's when you can look for a big reversal. So this is Friday, Thursday, Wednesday, Tuesday, Monday. Now, of course, on Monday, the weekly low and the daily low is the same thing. So it's just a regular daily rat trade. But from Tuesday on, when it makes a low, there's a possibility that that's now going to be the weekly low. And so if you would have taken this rat zone trade here, you could have captured the entire length right there. So that's something new to think about. So from Tuesday on, if the daily low is the weekly low and you get in a trade and you wind up profitable, you can look to hold that trade possibly until it makes a new weekly high. So you see here, this was Monday, and so this isn't so here, right here, is where it's breaking out of that the current weekly high and pushing to a new one. And ditto for any pair that makes a weekly high and the daily high makes a new weekly high, that's when you're looking for it to come down. But you have to wait till Tuesday to do that. So that's just something, a trade to put in the back, put in your back pocket, front pocket, side pocket. It doesn't matter what pocket. But it's something to be looking for, especially for you traders that like to trade longer or you want bigger pips. You can't sit in front of your computer and scalp. So from Tuesday on. And if you have any questions, you can post them on YouTube or you can post them in the forums that I like to frequent about that trade. And I'll probably set up a template, maybe even a dashboard just for observing that trade. But let's see. Once again, you can look at, where's the weekly? Here we go. This is just the weekly. You can almost eyeball it. You can say, yeah, see, it broke out of the last week's low. So it broke out of that wick zone, the weekly wick zone right there. So that was the short. And then when you're looking at it, it's like, okay, it put in a new. Now, let's just say you missed that trade, but you come back the next day. Now, did it make a new weekly low? No, it made a daily low. Once again, if you sit in that trade, it didn't make a new weekly low, but a new daily low in the wick zone of the previous day. You can see here, then you could take that the entire length. Now, of course, that's hindsight. Anything can happen. Yeah, the next day it could have gone lower. That's a possibility. But thing is, there is that opportunity. So if you recognize it, you enter that trade. Yes, it could go the other way, and that's what stops are for. Remember, back here, stop loss. So That's why we have the stop, because we don't know. And I've talked about that earlier this week in the basics, or starting over, you know, starting the new year. So this is something to look forward to for the rest of the year. Very simple stuff. Now let's see, we're doing the euro. Let's put the euro back on. Okay, and we're looking at the daily, and you see once again here, there's your weekly high. Did make a new high. It's starting to come back. Right? And so you see the euro here is 31 pips off of that high. And if you look at the weekly, let's see, I don't have the, where is that? Dash. And let's see. Oh, okay, yeah. Okay, this is a daily. I thought I had a weekly. Oh, somebody was asking me about these indicators. The it's the 2016 multimeter HHLL bars. That's this one, and then the HLLH bars. That's this one here. That's the multimeter that puts this out. So that was a 2016 donational. So I'm trying to think. I don't think there was really any other questions, but I do want to thank the people who, you know, thanked me for being a good teacher. I'm glad you feel that way. Not everybody does, but that's okay. In fact, I took a class yesterday, or sat in on a seminar, whatever you want to call it, and it was talking about adverse childhood experiences. And it was saying the more adverse childhood experiences you have, the chances of more problems you have as an adult. But what was really interesting during the talk, and in almost a passing comment, the speaker said something about the associations that we make, and how, you know, our experience forms, you know, our synapses in our brain, and then these are the associations we create, you know, with the experiences. And I told her, I said, you know, you made that as a passing comment, but that was probably the most powerful thing that you said. Why am I mentioning that here? It's because, see, now when these people say things about me that are on the derogatory side, it's really not about me. It's about what they associate with me, because it's never the thing, it's what you associate with the thing. So probably maybe they had some adverse childhood experiences or adverse adult experiences. So that's why it's not good. It's futile to take things personally, because it's not about you. It's about the association the other person is making with you. See, they may have had an experience with somebody else or something else. You remind them of that experience, so they really have nothing else to associate with you other than that experience. So it's just that simple. I mean, and it's even the same thing. You can think about that in trading. You know, if you have an adverse experience when you trade, then every time you get to click that button, you're going to start to, you know, have those negative emotions, negative feelings pop up. It might cause you to hesitate, and you'll blow the trade again, adding to the adverse experience, and it's just a downward cycle. So you have to do a disconnect between that. You have to be in the moment, see what's happening, and trade accordingly. So, fellow traders, I hope you had a good week, and I hope you have a great year. As always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.